Hey, good morning everyone. It is Thursday, June 20th. Prices of BTC currently at 9,235. And we're on the Bitstamp exchange on the 4-hour chart right now. So I've drawn this big trading range a little while back, and I've explained time and time again that if you are not trading in channels, if you're not understanding trading ranges, if you don't know how to draw horizontals or symmetrical triangles, or be able to read price action in terms of where support and resistance levels are, guys, you need to understand these basic philosophical things about the market. Okay, these are the things that allow you to become a trader, or even possibly a better investor that finds good value in terms of a stock or crypto or forex, by understanding what's happening in the technicals of the underlying asset. Okay, so with that being said, first thing to understand is that candles like these are nothing but a representation of buyers and sellers meeting at a certain price, and if the demand is higher than the supply, that means the prices are going to keep on moving up, meaning that if people are willing to pay a higher price for a particular asset, that means the prices are going to keep on moving up. And when price comes to a point, a decision point where the demand is not enough and the supply overcomes the demand, this is where you see these big red candles, these down candles. Okay, so to be able to understand these patterns, you have to be able to sort of research into the underlying understanding of why exactly these patterns develop. Okay, so let me explain this ascending triangle that we're seeing so far. Okay, I'm going to take away these guppy EMAs. Again, guys, if you want to use these guppies, they're just basically EMAs wrapped on each other. They increase by every couple, like every 2 or 3. It's 3, 5, 8, 12, 35, 40, as you can see right here. And it helps to understand exactly where price is bouncing off of which EMA. Okay, going back to the understanding of technical patterns. All right, so here's an ascending triangle. All right, so what exactly is this ascending triangle and why does it get created? Okay, so say price keeps on moving up, right? Price keeps moving up and up and up, and then price hits a critical level right here, and then it drops a little bit, and then price hits that level again, but then drops a little bit less, right? And then price hits that same level again, but then it drops a little bit even more less. So now you have sort of a ascending triangle created, right? Kind of like this, like that. Okay, so why is that happening? Okay, you can see that in this big move right here, okay, from here to here, the bulls were clearly in control. At this price marker right here, around $9,400, there was a decent amount of supply. The supply overcame the demand, pushed prices down. Bulls then recovered the price, pushed prices up again to the same level, got rejected again, but this time did not get rejected as sharply. The demand picked up the prices again and pushed to that same level again. So every time this area right here is getting hit, the supply itself is getting depleted in this region. And while at the same time the supply is getting depleted, the demand is getting stronger and stronger. Eventually what's going to happen is this area right here is going to run out of supply to sell. Okay, and what happens when demand overcomes supply? Well, that means prices are going to go higher, because if there's not anything in this region to buy up, that means that bulls will then push the prices higher and buy up at the next levels. Okay, this is where you see the stair stepping of price. Why? Because when bulls push to a certain level, they come to a standstill, they meet supply and demand equilibrium, they move sideways, accumulate all the supply that's left, and then push higher. Again, stair step right here, accumulate all the supply that's left, push higher. All right, this is why the ascending triangles come and get created. All right, now there's also some volume analysis done with the ascending triangles. Typically, you want to see volume depleting as you move into the triangle like this, okay? As you move into the triangle towards the apex, this area right here is called the apex, which is the closing of the two lines which create the triangle. Why? Because when there's a decent amount of supply being sold, the supply needs to go lower and lower, and the demand also is getting tighter and tighter. Okay, so prices are actually meeting at a even tighter equilibrium rather than a larger volatility range, which starts at the beginning. So you should see volume going down. So let's see if volume goes down. Okay. All right. Oops. Here is the volume starting at the beginning of the triangle right there. You can see overall that this looks like the volume is going down. You have this, one-off wick right here, but again, this was a fake out right here, so you can pretty much ignore that one. But look at the way the volume goes down. Okay, this is a perfect example of an ascending triangle, and not that I can say with certainty that this will break up, but more than likely, I'm at least 70% confident that this will break to the upside. Why? Because the volume analysis matches with the pattern of the ascending triangle. So then what does our target become? The targets of ascending triangles are typically the depth of the triangle, the height and the lowest point, okay? So that's about a $600 movement right there, from 9,400 to 8,800, right? So if we break out from this $9,400 point right here, then our target becomes 10,000, okay? 10,000 is the next point where I would expect, once this ascending triangle breaks out. All right. So now you've sort of learned exactly how, patterns like these work. Okay. They're not just, random patterns that are found, in the middle of price action. There's a reason to why these patterns are created. And there's also a reason behind why the volume follows the pattern in a certain way. All right. I hope that helps. Okay, so let me go to the 4-hour chart and let me show something else. Okay, now I've come to the understanding that people in the crypto space are essentially, looking for that big movement downward. Okay, where they can buy at 4,000 or 3,000 back again. Now, here's the thing, guys. There are no guarantees in any market. Okay, from historical data, at least from what I've seen, more often than not, when you do have a big parabolic move like this, there is at least a 40 to 60% retrace of this entire move right here. Okay, crypto markets are different. I don't think they're that different where they just don't follow any historical data. But if it doesn't happen, right, don't be surprised. Don't keep waiting until prices are 12,000, 14,000, 20,000, because prices just may not come down. Yeah, you may have, one of these sharp events like this where you have a big, drawdown candle and a sharp wick that cuts through every single stop in the middle of a day. Chances are you're not going to catch it. All right, let's be real. You're not going to be up 2 a.m. in the morning, looking for those candles, and more than likely, you're not going to know exactly where to put your order and where to get it filled. Okay, so if you're truly looking to get into a market where the prices are good, you have to be able to understand where the technicals seem good. And in my opinion, the technicals seem good here. They've been good here, and they've been good here. Okay, even back here, they've been good. We've been trading this entire range for a long time. All right, in our community, you can see if you go to gains reviews, we're not just sitting on our asses not doing anything. You can go all the way back into 2018. We've been trading this market, whether it's a bear or a bull market. Okay, these are reviews from July 2018. These are reviews down here from September 2018. Here are some reviews from March 2019. Okay, even before the bull run happened, right? Here are some reviews, more and more recently, like May. Okay, let's see. Here's some right here. 10-minute trades by tip from one of our members. Investments up by 20%. Okay, definitely worth the $99 per month. 12% on link. All right, here's the most recent reviews where you can see I'm the greenest of green when it comes to trading. took a 10% profit. One of our members was currently up 103%. Guys, that's 103% in a position recommended by me as a long-term hold. Again, I cannot recommend any, anything because this is not financial advice, but I can show you exactly what I'm doing, and if you want, you can follow and make some gains with me. And unlike other crypto groups or people on Twitter or other Discord groups, I show exactly what I'm doing. Okay, sometimes I even show my entire position. Like over here, I showed my July options call, a few days back. This is actually up much higher. I'm in the 110% ROI right now, but I show my entire position. Okay, most people just show their P&L and they don't even show what instrument they're using, how much their size is, what their average BTC is. Nothing. All right, all you really see is this P&L, right? You know I'm talking about you, right? So listen, guys, if you're watching this video and you see our work be useful, and you see that we are transparent, we keep everything visible in our community, whether it's open positions right here that I show every single day what I'm doing, right? Everything I do is open right here in our community. What I'm trading, when I'm trading it, when I got in, when I'm getting out. I even talk about when I'm taking profits. Okay, I haven't quite posted the profits here. Maybe it's in a different channel. But you can see, back here, I talk about the open positions, and then let's see. Oh yeah, here's one, right? Trade closed 10% at 360, another 12%, capital close at 10% profit. Okay, so you can see that everything that we do is open, guys, and we also talk about the losses. We're not afraid to talk about the losses, right? But we keep our losses small. All right. Okay, enough tooting the horn of my Cryptosomniac community. Let's get back to the analysis. All right. So the point is, in terms of technicals, things look good. All right. We've been trading this market really well. I've been making a lot of gains in this market, and whether you watch my videos or not, I hope you make some money in this market too, because you really have to think about yourself as someone who is exchanging your time watching these videos and watching these analyses. Are you actually seeing the benefits, but while you watch these videos? Okay, if not, then maybe you need to join our community where you actually see some proper gains in your portfolio, right? Instead of just watching and not doing anything and then following your own intuition, buying at the top and then selling at the at the bottom, right? So with that being said, technicals look good in this chart. If you think that prices are going to go down, you have to figure out how is price going to push through these high volume nodes right here. Is there enough supply left in the market to be able to push through these lower levels right here? I personally don't think so, at least not yet. There may be a time where prices are looking really sharp, and like I said, we may have these couple of random big red candles that rip through everything, but that's going to be an exception, not the norm, okay? Because this is the definition essentially of a bull market, all right? At least on the daily and weekly time frame, it sure looks like it, okay? We've had some bullish crosses on the 100 and 200 EMAs. We are above the 400 moving averages. So that's definitely the definition of a bull market, guys. So really think to yourself what you're doing in this market. If you're still waiting on your hands and not investing in. Okay, I'm not telling you to buy or sell. I'm just saying that ask yourself the question, what are you waiting for? What sign do you need from the market to trade it or invest in it? Okay. With that being said, let me show you this chart as well. Okay, so here's the thing. With this ascending triangle being created that I showed you earlier, where the top is right here around 9,400 and the rising trend lines right here, you can see we bounce very successfully off this 8,900 resistance right over here, this gray box. Okay, this is also a very positive sign because as much as the bears tried to sort of force the price down, they could not. Okay, the bulls resiliently pushed the prices higher and now they're looking to break this 9,400 area into that $10,000 range. Okay, so a couple targets to keep in mind. Obviously, if you do buy here, you can set your stop maybe below the wicks of these right there. Okay, so in my opinion, things are looking very bullish, but you can do your own thing however you want to trade this market. All right, now let me go on to something else. Okay, I drew this let's see where it is. I drew this pitchfork the other day, and I wanted to show you guys why exactly do these pitchforks matter. Okay, remember I stated earlier that prices move in channels. Okay, this is a perfect example of how price has been moving in channels. Each one of these markers right here, I've labeled them, are representative of a Fibonacci movement in terms of this rising channel. Currently, we're just bouncing off the gold, which is the 0.25 fib of this channel. Previously, we got rejected by this gold on the outside. All right, this gold 0.25 fib on the positive side. So if we get up towards that level again, which again is right around 10,100, 10,200, we could see another bit of a pullback, because you can see right here, this gold line was all rejecting the price right there. Okay, this gold line on the outside, the 0.25 fib. So if you do get to this point, maybe you can consider taking profits again. If you want to learn how to draw these pitchforks, again, come join the Cryptosomniac community. There's a Discord link at the bottom of this video, and I can teach you guys. All right, so another thing that I'm going to do is this. Okay, so let's do this. I'm going to take this away from the weeks and the months, and we're going to draw this same chart, or I'm sorry, the same pitchfork on the monthly time scale, and it's going to be a bigger pitchfork. All right, and you can see it live in action how I draw it. Okay, maybe I'll draw it on the weekly. The weekly might be a little bit easier. Actually, it's not available here. Let me see if I can find it on a different exchange, maybe Bitfinex. Okay, Bitfinex works. All right, I'm going to turn off this volume profile and the volume itself. So what we're going to do is we're going to pick up the monthly chart right here. All right, and I'm going to pick up this pitchfork right here. All right, we're going to pick up the bottom right here, this top right here, and this bottom right here. Okay, that's how you draw your pitchfork. Okay, so you can see that once price was overextended to the downside, right, now price is looking to start poking past these pitchfork fib levels, okay, on the monthly time frame. All right, let me see if this is a bit more visible on the weekly. Actually, I don't want this to be available on the, here's the weekly. All right, here's that weekly chart, and I'm going to draw this a bit more properly there, and I'm going to grab this one and put it to the top of the bull market, right around 20,000 or so, wherever that was, right there, and this is the bottom right there. Okay, so remember that the pink, I think the pink was, let's see what the pink was over here. The pink was the 0.75 fib, okay, and the purple is the 0.618. All right, so let's go back to that. Here's the weekly. So pink is the 0.25 fib, and the purple is the 0.618 fib. Okay, again, we're getting rejected right now on the 0.25 Fibonacci level right here on the weekly chart. You can see clearly. If we do fall back down, we will go back to the 0% right here, okay, which is the white line. And that could be, if we fall straight down, we could find support right around 7,000 or so. But again, remember, as I've stated before, that when price moves up like this, and then it starts moving sideways right near resistance or fib levels, chances are it's going to break up to the upside. Same thing is true when price moves down near specific key support levels and it just kind of moves sideways near the critical support. More than likely it's going to break to the downside. Okay, so this is the same thing that we're seeing right here. We're moving sideways right near this pink line right here, which is the 0.25 Fibonacci level. And if we break this to the upside, we will go as high as 11,700, 11,800 if we move literally in the next week or two. Okay, that becomes the next resistance level on this 0.618 pitchfork fib. All right. So I just wanted to show you guys how, when you see all these pitchforks drawn across the crypto sphere, how to read them, how to understand them, what they mean, and why they're useful. So I hope you now know that pitchforks are nothing but, drawn from previous, lows to the range of the entire market that you're drawing, whatever time frame that you're on. And then each of these, rungs represents an individual fib level. Okay, that's the only reason that they're important, because they utilize Fibonacci levels. And if you haven't heard or used fibs before, trust me, you want to learn Fibonacci as best you can, because they're very useful in financial markets, especially in the stock markets, commodities, Forex. A lot of traders use them, and they're very useful in the crypto markets. All right. Okay. And let's see, I guess also within this, weekly pitchfork, I guess we still are in a parallel channel, kind of like this. It's hard to sort of draw, but I guess it's sort of like this. Hard to squeeze in right there, but I guess I would say it's something like that. Okay, so we're pretty much reaching to the top of this channel. Maybe you can draw it this way too, which is the start of the, the bull run right there. And then maybe like that. Yeah, I would say this is probably more appropriate. This actually touches one touch right there, two, three touches right at the top, and then fourth right there. So yeah, this is probably the more appropriate rising parallel channel that you see on the weekly chart. Okay. It doesn't look that great, but it's definitely, big sort of parabolic movement that is encapsulated in this rising parallel channel. So as long as this parallel channel sort of holds, okay, and you can draw this on your own chart on the weekly, I would say we're still looking good. And I've said time and time again that, when we start looking at this chart right here, let's see, okay, this chart right here, you can see that really the next big levels that are left are between 9,600 and 11.7K. If we break out of those guys, next target is right here. I'm gonna map that out right now. Okay, right around, I would say 13,000. All right, so I'm gonna move that right there. And then beyond that, I guess 13 and 14 is probably the range of the resistance, but I'm going to mark it as 13,000, then really just this top right here, which is the 19,000 or 20,000 top that we see. All right. So really, after this white block is broken, those are really the next big targets that we see. Okay. Awesome. Let's see what else we need to talk about. I wanted to talk about ZEC. Let's see, where is Zcash, US dollar? Okay, here's Zcash, all right? I said yesterday that this is a trade that I want to get into, and I gave this away to the free lounge members, and I'm giving this to you for free as well. All right, Zcash is looking like a very beautiful, rising 45-degree angle movement. If you are looking to get in, I'm actually trying to get in this region right here, where this previous resistance top right here and right here gets touched as support on the way down and then moves back up towards this block. Okay, that target is anywhere between 135 and 154. and I'll definitely be taking profits in this region once I find that I can, get a good buy-in right here, okay, in this area. It's not necessary that price has to come down to this block, but it would make me feel a lot better if it did, instead of, coming just to this area and then moving back up, because usually you want to see previous resistance, like this resistance right here, and then came back down, this resistance right here. You want to see this broken to the upside, tested as support, and then move on up. This is really one of the most successful ways assets can keep on trending up, because they have now ensured that the previous people who are selling in this area are now buyers, okay? Because whenever price comes to this level, they reject it and then they push it higher, right? This is why previous resistances turn into support and previous supports turn into resistance levels. So this is where I'm trying to get into Zcash. Zcash is available on Kraken, Bitstamp, Coinbase Pro with a USDC pairing. I'm sure it's available on Binance. So, but anyway, you can choose to buy or sell, but I'm definitely going to be picking up some in this region. All right. Let me see. I wanted to talk about BTC dominance because I've spoken about it a few days ago. I think people really liked my explanation, so I'm going to go through it again. Here's the BTC dominance, guys. Currently at 59.9%. Okay. If BTC dominance keeps on ticking up, alts will lose more BTC value and more than likely capitulate. Okay, they're already sitting on critical resistance or critical support levels. Okay, let me give you an example. All right, so let's just take XLM, right? Even though I like XLM, the chart is absolute trash. Like, it looks really bad. Okay, here's the XLM chart right here. Okay, let me show this to you on a line chart. Look at how this chart, how horrid this chart looks. It's broken some of the most critical resistance levels or support levels right here, broke it, went down, found another new support, came back, tested this as resistance now, came back to this level, moved sideways, broke this one again too. Okay, remember how I just stated earlier that when previous resistance or support levels flip, right, that's really the sort of nail in the coffin for that asset. Okay, so you can see right here, it moved sideways near the support, broke down, found new support, went up, found this as resistance, and then moved down even further. Okay, alts have been losing significant Satoshi value due to the fact that BTC itself is gaining US dollar value and it's gaining dominance. Okay, those two things, when they go hand in hand, it's basically a recipe for a disaster for altcoins or the entire alt market. All right, and the alt market that I'm specifically talking about is those that do not have direct fiat on ramps. Okay, so meaning that Ethereum, Litecoin, Bcash, even XLM, EOS, some of these are exceptions because they actually have direct on-ramps to the crypto space without having to go through BTC. Though XLM and some of the other major cryptos too, or major altcoins, can only be bought with BTC. So with those pairs suffering so deeply, the only reason they're holding up their US dollar value is because BTC's US dollar value has been trending up, as you can see right here. So what do you think will happen when that US dollar value falls a little bit? That means that this right here will fall even further. And it will not only fall with Satoshi value, it will lose even more significant BTC, or I'm sorry, it will lose even more US dollar value. Okay, so the fiat value it will lose, and it will lose Satoshi value. So it basically loses, two different ways, and that's an even significant loss than just the Satoshi loss or just the US dollar value loss. So this is why I think you need to be very careful by looking out at this chart and seeing that if alts are looking very weak already, you may not want to be trading too many alt positions, okay? And especially in our community, we trade very little alt positions. The only reason I'm trading Fetch is because it has a beautiful chart. You know, the structure is really good, and I actually think that the BNB platform-based tokens are going to do a little bit better than altcoins, the other shit coins that are out there. So this might be what the crypto space needs, this capitulation of these altcoins to force people into jumping into BTC, further accelerating this price movement up, right? And then causing a capitulation further for alts, okay? And you can actually see this visible on the others. This is the other altcoin dominance chart. You can see right here, they're already sitting at critical resistance level or critical support levels right here. If prices break this support, I can almost say for certain that this is going to be a big reckoning for the crypto space right here. My sad face right here says that, you know, in a very succinct manner. So you can see that, you know, why we're sitting at a very pivotal level in the crypto space. Okay, so if the dominance of BTC goes up, that means the other altcoin dominance goes down. If it already breaks this critical support, it's going to be a real disaster, guys. All right, so please do be careful. I've covered a lot today. I went over the dominance. I went over pitchforks. I went over, you know, if you're waiting as a person, you know, on the sidelines in this market, really ask yourself why. What price are you waiting for? And you know, if prices even do fall, guys, really ask yourself, if prices, you know, fall back down to 4,000 or 3,000, do you think that you could be the kind of person who will buy right here, or are you going to wait for them to fall lower or go even higher? Okay, because if you did not buy in right here, all right, in this area when prices looked bloody, you know, for your long terms or if you weren't trading in this area, I can guarantee you that you're not the kind of person who's going to buy when prices are going to fall back down again. Okay, it's just something to ask yourself. It's no criticism or no shade thrown at you. Really just ask yourself, what kind of trader are you? What are you waiting for? Why are you waiting on the sidelines if you are? How much are you invested in the market? Do you have enough exposure, or do you have too much exposure? These are important questions that you need to ask yourself. Okay. Let's see. And I think that covers it, folks. I've covered a lot. I've covered the Zcash trade. Let me show you guys another you know, couple of things in our community that are very useful. Other than Bitcoin analysis, where I post, you know, multiple updates through the day, everything that you're hearing now, my community has heard it days ago, and we've been well prepared. I give, you know, important lessons of, you know, be sure to have fun and don't stress in the market. The markets are dynamically changing, so you should be adapting and changing with them. You know, when markets are bullish, as it is right now, don't fear big drops. Excuse me. Because they get bought up quickly, guys. Because, you know, markets just don't, you know, they don't just capitulate just like that randomly. All right, there's always some warning signs that give it away, whether it's weakness in volume, whether it's, you know, a candle like this where it was a doji and then you see a follow-up bearish candle. But then remember, after that follow-up bearish candle, we had a follow-up even stronger bullish candle. So then again, it speaks at the strength of the bulls. All right, being able to understand supply and demand economics of, if this entire, you know, 18 months or 16 months was all just selling right here, this might have been the final capitulation, and all of this was bought up by, you know, smart money institutions, and now there's just not enough supply left in retailer hands. So for institutions to push through these levels, it's much easier. Okay, these are the things that you need to be able to understand to be able to trade markets like this. Not just, you know, oh, if prices are going up, if prices are just going up, I'm going to try to ride this wave on up. No, because you may actually be buying the top and you don't even know it. Especially if you're buying, you know, shit coins that you think are, you know, at a small market cap and you think they're going to be very useful in the future. Guys, don't kid yourself, because if they are small market cap coins, they're that for a reason. Okay, if smart money got in, more than likely you'd see some news about them, you'd see significant volume of buying in them, you would see something give it away. And I just don't see that, when you start looking at coins that are ranked like 375 or, 190 with like 10 million or 20 million market cap. Okay. Yeah, they may have potential, but I personally like to just stick to, the top 15, top 20 market cap coins and trade them. Sometimes, I'll pick up some for the long term that may show really strong management, really strong projects, but I also like to see, big investment funds get in before I do. One of our picks that I showed you earlier, right, over here in the gains reviews, the person that said we were up 103%, this position is Horizon. Okay, Zen was one of my big picks because I knew that Grayscale Investment Fund was going to get in big. Okay, and I bought in this region down here last year, and you can see it's come back to this level. So I'm going to probably pick up a little bit more while the prices in terms of Satoshi level are low. I may even trim down some of my position because the Satoshi value may have gone down, but the US dollar value for Horizon had gone up significantly. Okay, so this was one of my strong long-term positions, and I got in again because Grayscale Investments, which is a big investment fund, got onto Horizon. So I have to admit to myself sometimes, and you should too, that you may not know everything that's happening in the crypto space, and you need to understand and read about what other funds are doing, why they're investing in certain projects, why is their vision so intact about certain projects and what they see in the future. Because I'm guaranteeing you guys, they employ much smarter people than myself or you or a lot of people in the crypto space. And there's nothing wrong with following, people that are smarter than yourself. Okay, there's no glory lost. Just ride on the backs of smart money and you will be just fine. Definitely do not ride on the backs of, people posting random charts on crypto Twitter. All right, if people have been doing this as long as I have, posting not only through the bull market in 2017, but all through the bear market in 2018, and even now, clearly there's something to us. Clearly these gains reviews all the way through, last year, 2018, means something. Okay, so ask yourself, what resources are you listening to? What communities are you a part of? And are they helping you grow as a person? Are you making gains in terms of trades? Or are you simply just existing in this market and being liquidity for people like myself or smart money? Okay, ask yourself, if you are losing money in this market, why are you losing money? How can you improve? Okay. All right, folks, I've covered a lot. I hope this analysis helped. Thank you so much for watching. Please do give us a thumbs up. We take our time out of the day, every single day, to show you guys this BTC analysis. Again, I look forward to BTC hitting this 10,000 and 12,000 region right here over the next couple of days, maybe even in a week or two. So yeah, that's it, folks. I hope you guys enjoyed this analysis. Take care. Cheers and have a wonderful day.